Welcome back to the channel. Here's Trader Jan. In this video, we're going to do the market analysis for the 25th of November in 2025. I record that session on the 6th of December due to the fact that for the last 2 weeks, I've been developing little helper for me to do those market analysis and try to find where the market's going to react. You see this in those little colorful pictures here. It is kind of a heat map style, similar to Bookmap, but in comparison to Bookmap, Bookmap is having the passive market participants with their limit orders on the heat map, and I show the actual trades which actually happened in the market. So I believe in liquidity, I believe in order flow, so that's why I developed that. And a good example is now we can see here, if you see at this area here, there's huge volume being traded on the 21st of November. And not surprisingly, you see here in the market, even though it comes down with quite a rush on the 24th on Monday, it is consolidating here at that there's at least a reaction of that market in that area. So you could assume that when you're in the trade here, at least be careful when the market hits this line here. And then eventually the market went back up again and retested that location and then went back up again. Looks also nice and great after the facts and when you see the future. But since I'm on a journey to get profitable, I'm not yet consistently profitable. So I use that one as a learning tool for myself to learn market analysis and define locations and then use them for my trading. Now looking at the daily chart, we had quite a positive day. It was a long day, definitely. We're not sure in the preparation for the last day if that would be a resistance here and the market would go down or would go up. So now we see the market went up. Now looking at the locations which we defined in the last review, we defined them here at that point, and we see here on the hourly chart it went nicely up. That's about 80 ticks, then it went nicely down. Didn't catch that location here, and probably it is because, let me put that one in here, it is that very location here where the market on the day before got rejected here, rejected here, rejected here, and I should have defined that one as a location in my market analysis. Didn't do it. Nevertheless, looking at the market here, went up, nicely up, back down, up, 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 up. So to our location. So our locations for the last, for that day were, in my opinion, quite good. Looking at here from an 15 minutes perspective as well. It went a little bit up and down, a little bit here and there, but it eventually hit that location and then back down. And that location here was a location we identified before. Actually, on that day, we said already this one here, this area here is so thick. The market might be consolidating in that area and see what happened here. There was a lot of liquidity here, and the market was going back up and down, up and down, up and down for about 10 hours. And eventually at 3 o'clock in the morning, it's moved out of that. So that's actually it for that moment here for the review. Then going forward to check the exact locations if they are still valid for the coming day and what the bias might be for the coming day. So looking at these locations here, I would, considering that the last locations here are more relevant than the previous locations, I would say that this location here probably because it functioned as resistance here, market went back, market went through, tested again, and now it's support. So that one the market might react again on that level here. Then I'm tempted to take that daily close here as a location. This one here because it was already here as a new location at the bottom of that high volume area here. Then this area seems to be fine for me. With this one here, I might go a little bit higher up here with that location because it got rejected here, it got rejected here, it got rejected here, it went down and then went up again and got rejected here and went up again. So I tempted to change that one there. Now I'm looking for another location here. I'm tempted as well to choose more that area here as a location. And definitely this area here, there's quite some high volume for a move up is high volume area. There's a very high likelihood that the market gonna react right here. Then for that location here, I guess I'm gonna change it to this area where we have this volume here. And up here, I'm tempted to just leave it like that. And there's here another area. I don't want to cluster it too much, but that one might be an interesting location as well. Just a short one, just a small one. So then let's do the actual work. We set this one here a little bit higher up around that liquidity here. Yep. Then this one here more towards the close of that day, starting with those ones here. This one's here, putting it higher up. And this one here, not so much. This one here deserves a location that has been just market was just shortly here in this area, but it created a lot of noise or enough noise to print a bit of volume. So then this area here, and we have that area here. I'm tempted to just leave it like that one here for the moment. Oh, a little bit higher at the end of that. Right, so even if the market comes back here, it is a very short range. I liked scalping, I like range trading, so this might be a nice range to trade in. Now, looking at it like that, it looks pretty much strange because here I think I should put it more here because the market came up here, got rejected, came back here, got rejected again, went through and then tested that area again. So that is more, my intention is more, okay, up to that high volume node here. There is something going on. And then, yeah, let's see. This one here. I don't want to last too much down. So here we got that one. We said, okay, we might want to go a little bit more here to have that area covered here, which is a high volume zone here. So we might want to just limit it to that one. Okay, so in terms of bias, it looks more long. If we look at the overall market structure here over the last 3 days, we had a massive sell-off here, and then slowly but steadily the markets went up again and consolidated here a little and then went down, but finally found traction again. And price action wise, it should go up here. So above that level is definitely long. And if that one was used to be a support level here, if that one turns out to be rejection level, I would trade more within that range here. I guess those huge areas here with a lot of volume, they might be interesting for a range. So I would more trade ranges. In terms of short going, I would only go short after that level here. If the market decides to go, it's the wrong one, decides to go down here, bounces back, and then goes further down, I would go short here and here with more range trading. So let's see what the market brings. And oh no, maybe we're gonna have another little location here. Is it worthwhile counting that one? No, I'll leave it out. So let's see what happens during the day. So overall, long buyers and happy trading. See you at the trading floor.